In this weekly outlook, I want to touch upon a few fundamental things that we have not gone into last week. And one of them is the development. As you always know, it starts out with the dollar. Now, on the dollar, we could see the false breakout, which we discussed that it most likely will be able to go up that 50 EMA and possibly even for a new high. Now, that new high is yet to be formed on the daily chart. However, every other time frame, meaning intraday, has been basically showing us nice uptrends, which is why a lot of dollar dominated pairs are now weakening across the board. So in essence, yesterday, what we had from the US as in data point was the retail sales figures and the ISM manufacturing PMI. And on the retail sales month and month as well as quarterly, they are sluggish. They are looking to take a downward turn. However, the ISM manufacturing once again posted a higher number from the 54 previous number to the 55, indicating expansion in the US economy. And this is why, despite those sluggish retail sales numbers, we can see that the dollar is acting strong despite still being below resistance, despite still not making it above that 9750. Now 9750 is again a resistance area, and if we manage to close above that on the weekly or the daily, we could easily hit 98 or even the 9900 in a couple of weeks to come. And this means that euros, pounds, Canadians, yen, every other pair will basically weaken against it. It doesn't necessarily mean that we will see clear opportunities on all of these major pairs, but to know that the dollar is going to be strong in the next couple of weeks based on these data points is a good way forward. Now, at the same time, there's no data point only on Friday from the US, and that is the average hourly earnings, the non-farm employment change, and the employment change itself. Now, what we can again see is that this reading will be for the month of March, and the previous one was a winter month in February and January. So the 20K that the US economy added as in employment change in February will definitely post a higher number this time around because it's a March reading. So expected is 175K, which is way higher than the 20K that we had last time. So that is in and of itself a good positive number. Now, average hourly earnings have basically weakened 0.2% from the last time, but then unemployment rate is staying at record lows. So basically, as soon as we would get a better than expected number, which stands at least 90% chance now that we would see a better NFP number than the last time, and unemployment rate stays at the lows of 3.8%, regardless of what the average hourly earnings is, I believe that this will be the catalyst on Friday. The NFPs, these data points will be the catalyst to push this dollar above the 98. And if we close above the 98 next week, again, all of the major pairs will fall against it. Now, if you remember from last week, we had a central bank coming out having a bearish tone and indicating that they're looking for rate cuts instead of rate hikes throughout this year or throughout the coming couple of quarters, and that was the New Zealand dollar. So we had New Zealand weakness across the board from last week onwards since that statement was released, and we do have it this week as well. So if we pair up a really weak currency from the recent economic events and the recent central bank statements, then New Zealand takes the top spot. And pairing up that with the dollar, which is about to be strong based on these fundamental figures that are about to come out at the end of the week, we can clearly see that on the weekly as well as on other time frames, we are looking at New Zealand weakness against the US dollar. And so as you can see, we are still in this range, but as soon as the 0 to 67 cents to the dollar would show a lower low, there's nothing to stop this New Zealand from falling down to the 64 again or even 65. Now, it could easily show support from that area and even have a higher low, but the point is that until then we would easily have a 4-to-1, even 6-to-1 trade on this New Zealand dollar pair. The second central bank, which is why I waited with this video to release it today, is the overnight what we had from the Australian Reserve Bank of Australia. So they are basically following in the footsteps of the New Zealand and citing global economic growth slowdown, and this is why again they had a bearish tone as well. They didn't really indicate that they're looking to necessarily cut rates, but their language in their statement was enough for market participants to basically write it off as same as in New Zealand, same as looking for a rate cut in the coming quarter and throughout this year. As soon as a central bank in its statement rules out rate hikes, obviously the next possible chance is either being neutral, which what they have been doing for the last couple of years, or simply cutting rates, which is as soon as monetary policy would be adjusted, it would be a cut. So they can stay neutral, but now it's clear for market participants and investors that as soon as monetary policy would shift, it would not shift to the upside, it would not improve, it would basically, they would have to cut the rates. And this is again something that the Australian dollar felt on the intraday trading session. And as soon as that news was out and that statement was out, we could see weakness. Now, it's not as drastic as on the New Zealand dollar, but it is still something that we can look forward to, as in New Zealand weakness and Aussie weakness paired up with stronger currencies such as possibly the dollar, and then we can look forward to possibly the Canadian or the euro, if it'll actually, those will basically be able to stay above the weakness of the Aussie and the New Zealand. So we'll have to see how that goes, but there's no indication that they will. So this is why for now I'm looking at the dollar, simply pairing them up with the weakest currency. So based on this, my watch list here consists of obviously New Zealand dollar. I'm on this trade already. I took this trade from the top, had a 1-to-1 trade, and now I'm in it for the long haul from this higher low, lower high on the 4-hour chart. So as soon as I took this trade, it was based on the intraday price action, but also if you check the daily here, you'll see clearly that the trend line has been broken below, and there is some support at 67 as I mentioned, but there's not a lot that would keep price afloat since we broke this trend line. So we could see some profit taking at this point, in which case you could either look to close half of the position or even all of it, or you could just leave it on and have a monster of a trade if this dollar manages to strengthen while this New Zealand is acting out its weakness from the RBNs at the Central Bank of New Zealand. Second up, again, New Zealand Canadian. Very similar scenario, Canadian being strong in face of a weak New Zealand. And now to shift things up is the euro against the yen. You could see this triangle here. This is something that I've been looking for at least 2 weeks. I think I mentioned it last week as well. So 125 is where the resistance is. We have the EMAs. We have a trend line as well, which broke below. And what we could see is possibly a retest of this 50 EMA with the trend line and the triangle. And as soon as that would happen and it would end up in a lower high rejection scenario, we could have a nice trade on this. And this is a purely technical trade. There's no recent fundamentals that this would hold up to be a catalyst either for the formation of the confirmation of happening or actually the trade working out. But it is a very good technical trade so far. Now we could have in the coming days or weeks some sort of euro or even Japanese figures or any sort of statements that would come out of their economies that would be a trigger for this, but for now it is solely a technical trade. So euro Canadian, once again, looking for the so if you notice by now, these are all pairs that have been in place from last week as well. So once again, lower high, if it happens, will be another technical trade there. Aussie New Zealand, now this would have been a nice trade if the New Zealand dollar and the Australian dollar would not have been both weak currencies. So we had initially the New Zealand being weak, which is why the Aussie strengthened, but then at the same time what we could see the Aussie coming out with its central bank statement citing the similar thing of the bearish tone and possibly rate cuts throughout the year. So now it puts it as a weak against a weak currency, and it's really, there's two things that can happen, and at that point either one of them becomes weaker or stronger based on new data point, which what we would have to wait for that, or simply there's no advancements and we would just see a range based on two weak currencies. Dollar Canadian is an interesting one once again. The initial retest up to the 134.50 was sort of, it did play out. However, we have the second time around now. What we could see is the higher low. So if that higher low once again works out based on the 133 support and based obviously on dollar strength from the NFPs, then we could see this once again go up to the highs and possibly at this point make a higher high, which it failed to do just a couple of days before. And lastly, one pair that I forgot to add is the New Zealand Japanese yen. So very good signal here on the daily. We have a lower high, which is confirmed by a pin bar, and basically a 50 EMA rejection. Now, again, we do know that New Zealand is a weak currency, but you don't want to overexpose yourself on it. So if you took already a New Zealand sell, which I did on the New Zealand dollar 2 times now, and I closed one of the positions, you have to risk assess correctly and not basically risk too much on New Zealand weakness solely. So depending on which one you can basically catch first, is both of them are looking good to get in. I would say that New Zealand against the Japanese yen, if it has a retrace to a lower high, it's providing better value now than with the New Zealand dollar, since that is now already quite extended. And that is basically what I've been watching throughout the week, as well as technicals and fundamentals. Any questions? Let me know. Cheers for now.